Good afternoon to one and all, and welcome to today's webinar. Our Chief Investment Officer, Mr. Sunil Damania, will be providing insights on how to decide on the right company and also how to validate a stock pick. He will also be providing some of our top picks as of today. Towards the end, there would be a Q&A session. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome to all of you. I have a request that many of you also want to ask question in Hindi, and if that is so, please put down the question in Hindi and I'll try to respond those questions in Hindi. So जब भी आप कोई सवाल लिखते हो तो उसके नीचे लिख लीजिए हिंदी में आप अपेक्षा करें उसका जवाब की तो हिंदी लिख लीजिए मैं उसका जवाब हिंदी में देने की कोशिश करूंगा. Now the basic question that once someone asked me a question, what is a price for a good research? And I said that's equivalent to my portfolio value. That person could not understand basically what I am saying. So I told him, if you get a right recommendation on the equity market, probability of you making money goes up 100%. At the same time, if you do not get a right recommendation, whatever money that you have invested in the equity market, that money goes down the drain. And I was talking to various investors from various parts of the country. And when I speak to them, they said, our portfolio is completely underperforming despite overall market is doing so well. We continue to hold company like ITC, Yes Bank, so and so forth. And they said, where are we going wrong in terms of not able to ride this market? And I told him that the simple difference is that you need a good research, a good equity research platform that can help you to create alpha on your portfolio. And he said, like, what do I mean by that? And I said, very simple. Go and start using a platform that gives you a call which are more beneficially for the investors than the person who is giving that research tips. So that's what I'm going to showcase today. Now, today as an investor, we all face a dilemma. Dilemma in the sense that you don't know whether you're holding the right stock or not. Like, for example, I keep getting one question very often is about ITC. And I have also promised that one day I'll do a exclusive webinar on ITC as a company. Now, many times the investors don't know whom to go and ask, should I continue to hold ITC? On ITC is one example. There are many people who hold IndusInd Bank in their portfolio. In the last 3 years, IndusInd Bank has gone down by almost 50%, despite overall market doing well. If they continue to hold, in case if they are bought, and in case if they are not bought, should they buy now? Where do you get this kind of a unbiased advice from someone to whom you believe that person will give me a right advice? So that's what I'm going to discuss today in my webinar. We will open the floor for question and answer. And if you want me to respond any of your question in Hindi, please say so. And my colleague Jason will pick up that question in Hindi, and I'll try to respond that question in Hindi. Okay. So let me begin my webinar. But before I begin this webinar, just a small disclaimer that this webinar is purely from an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. With this, let me this. So today we all are confused. In fact, all in the sense, many of us are confused. Why we are all confused, Because we don't know which way we are heading towards in terms of overall trend in the market. Why is that so? Because on one hand, we just come out of a second wave of virus. And there is a strong fear. And yesterday, our Honorable Prime Minister Modi made a statement that we should not take a little lightly about the third wave. Now, we don't know what, so if the second wave had its own impact, saving of almost 100 basis point from the GDP, as and when the third wave comes, what kind of impact it would have on the GDP. GST collection, first time in many months, has gone below 1 lakh crore. That is, I'm talking about for the month of June. It went below 1 lakh crore. And the market today has been trying to factor in that there will be a strong revival in the India Inc. earnings. And because of that, the valuation of this market, which is commanding extremely rich, it will continue commanding such a rich valuation going forward. So the basic parameter that everyone is taken for granted is the growth in earnings of India Inc. If you happen to read some of the research reports that are floating around, everyone has been saying that we would have Nifty 50 earnings growth for FY22, that is for this financial year, somewhere in the region of 38 to 39%, which is almost close to 40%. Of course, when these projections are made, one is not sure what kind of impact third wave will have, or whether India will have a third wave or not. We don't have a clarity on that. But that's what the projections are. Now, inflation has been little sticky, and day before yesterday, when the inflation data came out, it was little soft. It was not. It was much lower than what it was there as compared to the previous month, and that does give us some kind of relief. But nonetheless, it continues to remain above the RBI comfort level. Why? Because RBI has said that 4% plus or minus 2% range. In other words, if anything above 6%, it does give some amount of discomfort to the RBI. And this inflation is not only India specific. If you listen yesterday, if you read yesterday in US also, inflation had remained a little sticky. Okay? And that becomes a little cause of concern. Now, this rate of interest, which is another cause of concern for the global markets, has remained very, very unpredictable. Who could have thought in the month of March 2021 that rate of interest, the 10-year treasury yield will come down sharply? Most of the people were expecting it to go above 2%, and it fell very drastically, despite the inflation remaining a little stubborn. So I think the whole world is basically what you believe is going to happen is not happening in that way. In fact, the data points, the market movement, everything has become so unpredictable that does not give a very clarity of thoughts to the retail investors. What am I supposed to do in this kind of market? Should I put more money? Should I take out money? Should I do nothing, neither buy nor sell? And this is not only with the problem with the retail investors. I speak to some of the leading fund managers in the country, and they're equally a little confused about what should be the right strategy in this market. Then on the top of it, which was not there till last month, is a taper tantrum from the US. What is taper tantrum? Well, US will start slowing down its bond buying program, which it's buying 120 billion US dollar, of which 40 billion is for the mortgage back, and that they may start slowing down. And this could have a huge impact on the world market sentiment, including emerging market sentiments like country like India. And we had seen this kind of a taper tantrum impacting market sentiments in 2013. So that's another element of uncertainty coming in last month. And some of the central banks have already started scaling back the purchases. Like if you look at Canada, they have started doing it. Maybe Bank of England is reaching its predefined limit, and hence they will do it. Bank of Australia may do it. Bank of New Zealand may do it. And these are all the concerns market is trying to grapple with and try to understand what impact it would have on the market sentiments, what impact it will have on the earnings growth, what impact it would have on the liquidity, because liquidity is a very critical parameters for market to sustain going forward. And one other sticky thing which India should be concerned about, the rise in the crude oil prices. Why? Because year to date, the crude oil prices have gone up by as high as 72%. So we are all excited about Sensex and Nifty and mid cap and small cap doing well. But the crude has gone up by 72% in just first 6 months. In other words, on an average 12% per month, crude prices are moving up. And this has a very, very huge impact on the inflation. Why? You know, all that price of petrol has gone up, price of diesel has gone up. There are so many input costs for India which are crude derivative. And because of crude prices have gone up, many raw material prices have gone up. And that's another cause of concern. And how India is able to pass on that cost to the end customer is another line of concern for this investors. In such a uncertain time, what should be your strategy? We are holding many stocks in the portfolio. Which stock you should continue to hold, in which stock you should get out of? You definitely need an answer, am I right? You definitely need an answer, because if you don't do a right action today, you would pay a very, very heavy price on your portfolio. Because either you will not be able to get out of a company at the right time, or you may get out of a company which you should not be getting out of that company. Why? Because that company has a great potential to give you returns. If you remember, some of you would have attended my webinar and we discussed about IT sector, we discussed about steel sector, and that uncertainty, a lot of people were confused, and we did try to help you to navigate this kind of an uncertainty. So today, if you're holding 50 stocks, 40 stocks, 30 stocks, 20 stocks in your portfolio, you definitely want to know which stock I should continue to hold and which stocks I need to get out of it. That's a part number one. The part number two is that you keep getting a lot of tips from your friends, from your relatives, from your broker, maybe on a social media. Okay, how do you validate that tip? How do you validate that tip? Whom do you go and ask? Should I continue to hold this company? Should I buy this company which I received a tip? Or should I get out? Okay, and that's where you need some reliable partner to help you navigate that. Now there are three choices that you have. Suppose if you hold a stock, either you continue to hold, you buy more of that same company. Why? Because you're holding very less quantity of that company. And in fact, someone asked me a couple of days back webinar, but I'm holding a lot of IT companies. Should I buy more of that? So and so forth. And today we all know that all IT companies have gone fantastically well. They've all gone up very handsomely. So to that question, should you increase that your stake in that particular company, or you should continue holding the same what you are holding? Or third thing is that you should get out of that company where you feel that the script has reached its potential and further upside looks little limited from this level. And that's where would you go and find this answer from? Now let's look at what are the options you have. You may ask your broker. A typical broking firm would have a research on 250 companies or at the max 300 companies, not beyond that. Am I right? And more often than not, the company where you want to know is not under the coverage of that broking firm. And because of that, broker either is in no position to give you a view on that particular company, or if that person gives you a view, that view is basically purely without taking any informed research on that particular company. And then because of that, you get lost. You don't know what to do. Should you get in or should you not get in that company? Or should you get out of the company or you should not get out of that company? You don't get it clueless. You absolutely become clueless. And that's where markets mojo becomes extremely handy. Why is that so? And don't take any of my statement at the face value. Why is that so? The reason is very simple, because Marcus Mojo does not analyze 150 companies, 200 companies, 300 companies, or 350 companies. We analyze each and every port listed company bearing some insurance and the holding company. Other than that, we analyze each and every company. And due to that, we have a view on each and every company that you are holding in your portfolio at this point of time, or you want to validate the tip that you may have received on social media, business channel, newspaper, or from your friends. But then you may say, why should I believe your recommendation? What is your success ratio? I am happy to inform you that our success ratio is 80%. So whenever we say buy, the split goes up, and whenever we sell, the split goes down. That happens 80% of the time. And what does the Markets Mojo, why Markets Mojo has able to get that 80% success ratio? Because in our system, we don't have any place for the human bias. Okay. And because of that, whatever the recommendation that we are doing is a function of big data analysis without human bias coming in, and that increases the chances of our success in the market. Now, another good thing, and this is that feedback has come from many investors like who have time and again said that whenever we ask anyone, okay, then we don't get a clear-cut advice. So if you ask any expert, and if you ask him, what am I supposed to do with this particular company? He will say, ये company अच्छा तो है, पर 2-3 चीज इसमें जरा खराब है, देख लेना. What does this mean? Should you continue to hold or you should not continue to hold? Or should you buy or you should not buy? And that's where, again, Markets Mojo comes really handy. Why is that so? Because we will tell you in a clear-cut way whether this company is a buy or not, whether this company is a hold or not, whether this company is a sell or not. Clear-cut with the score. So within, suppose there could be 100 companies within our system, and you want to know which company looks the best among that 100 buy company. So we have a score, and based on the score, you can take a decision whether which company you need to buy. So that's a kind of finer granular detail that Markets Mojo offers to the investors community. Now, there is a very beautiful research which was done. Okay, and the beautiful research report was done which says that in the country like India, the 95% of the retail investors lose money because they do not take any informed decision while buying or selling that company. So what is informed decision about? Informed decision is nothing but before you buy, you must know why am I buying this company? And before selling, you must know why you are getting out of this company. But normally, we don't want to do a basic research about finding out what this company does, what is the financials of this company, whether this company is performing well, not well. We take very casual approach when it comes to investment. Am I right? Our approach is extremely casual. Can we do very quickly, Jason, how many investors who are attending this webinar are taking an informed decision before buying or selling company? We are very happy, we are trigger happy. Someone coming on a channel and we want to, he says buy, and you will just jump to buy that company without even applying our own mind what this company manufactures, what is the financial of that company, should you at all get into this company or not. We don't want to do that. And because of that, your probability of losing that, losing money on that particular company increases substantially. Jason, you are doing, am I right?
Yeah.
Now that's where again, we as a Markets Mojo believe in educating investors and helping them to take an informed decision. We will tell you, okay, Jason has started to let me take a pause for a couple of, I want 100% participation. So please everyone, I'm very happy the large large portion of people are attending this webinar and participating. 61% is this. Very nice. Okay. 70%. Very good. Very quickly. In half a minute, we got 70% participation. I would request everyone, balance 30% to please participate. I would appreciate if you can have 100%. %78%, 79%, very good. I'm not very sure what request I can make that balance 21% to participate. Please participate, my dear friend. Please, मैं हर एक को request कर रहा हूँ कि आप लोग participate कीजिए. Okay, let's conclude.
Yeah, I'll send the poll.
70% those who are attending this webinar are taking an informed decision before buying and selling. And I can tell you with confidence, most of them would be Markets Mojo subscribers. And those who are not taking an informed decision, that balance 30%, my request to all of you, if you really want to make wealth in the equity market, please start taking informed decision. So once from today, you should take a vow that I am going to basically take a very informed, I'm not going to buy or sell without understanding that company. And if you can do that, I can tell you, you will see the drastic improvement in your portfolio returns. And I can say with confidence today that 70% who have said yes, most of their portfolio would have outperformed significantly. I have no doubt. So I don't have a privilege to go through each one's portfolio, but I can say with confidence, those who have said no, probability is very, very high that their portfolio is underperforming. So Markets Mojo inculcate that habit in a retail investors community that please take informed decision. In fact, we give you 15 to 20 page detailed research report in each and every company on a live basis. It's not that we have a research report being done 3 months back, 6 months back, and we are asking you to read that research report to take a decision now. We make research report as latest as now. So the moment you go to our Markets Mojo website, click on a company. So let me take you that. So just to give you an example, so I'm just taking that liberty if you don't mind, Jason.
Yeah, sure.
And just tell me any company. Okay, let me take ITC because a lot of people would have an ITC. Okay, here we say ITC is a hold. Why it is a hold? And this is a given, complete reasoning has been given. But if you're still not very convinced, you can download this report, which I am downloading as we speak. That complete report will tell you why it is a hold, which runs into about 17 to 20 pages report. Okay, let's see. Let me open that report. Just see. I'm just going down. Does all data, how this company is doing, how its financial is, then how its technical indicators suggesting, what is its ROE, whether in which valuation, what are the competitors with which, where does this company stands, whether institutional investors are buying or selling in this company, that's also available. What is what are FIs are buying or selling, even FIs are getting out of this company. What are the factors which are not working for this company? Look at the poor CAGR of this company. We'll look at the poor operating profit of this company, whether look at the net profit of this company. Okay, now net profit for this company for last 5 years, 6.9%, which is not good enough even to beat the inflation. Forget about this one. So, what is the financial trend of this company? See, this is a kind of detailed research. Where does this company stands? Is it the biggest underperformer? Fourth quartile, and third quartile. In other words, in last couple of years, this company is distracted well for the investors. Okay, and then the result analysis of this company. Look at this, the kind of granularity that we are going in to help you understand what's happening with this company in this one. It's balance sheet, whether its borrowing has increased or decreased, whether the cash flow from operation is done better or not. Okay, where does this company stands with their peer group? Okay, and in the various parameters, market cap, annual sales, ROC, ROE, P ratio, price to book value, PEG, dividend yield, so and so forth. Okay, and then the company background. And this report is running into 20 pages, and that's available even on a micro cap company. If you pick up any micro cap company, such a detailed research would be available for each and every micro cap company also. So that's a kind of detailed research report I'm talking about to all of you. And once you read that research report, you get convinced. Okay, yes, I should buy or I should not buy. And then the moment that the informed decision comes in, you are taking probability of you making money or taking the right call in that company goes up significantly high. And that's exactly we want you to do. That exactly we want you to do. Now, how many times you have bothered to find out what kind of risk versus return that particular company has? See, again, it's a part of our informed decision. Have you ever bothered to find out that this company will have a higher risk and the lower return? Did you ever bother to find out? Because we all know, am I right? Each company does not have the same risk versus return profile. No two companies will have the same risk versus return profile. But how many times we have even bothered to check कि ये कंपनी में रिस्क ज्यादा है और रिटर्न कम है या रिस्क कम है लेकिन रिटर्न ज्यादा है? That's ideal scenario, right? Where you take low risk to generate higher return. That's the best scenario. But how many times we have bothered to find out? The answer is zero. And because of that, we end up taking a wrong company in our portfolio. The moment you realize in your mind, suppose this company में risk ज़्यादा है, return कम है, will you ever invest in that company? The answer is no. Despite if you are getting the tips from someone, the moment you realize that this is the equation is little ulta, you will not buy that company. And that's again, we will help you to understand. So I've taken three companies just for the benefit of everyone. Reliance Industries, Vodafone Idea, and ITC. And markets will educate which company has a what kind of a risk profile versus return. For example, Reliance Industries, if you look at it, it has a medium risk, low return. Vodafone Idea is a high risk, low return. Should you ever get into a company which high risk, low return? The answer is no, but I can tell you with confidence today, so many of you are attending this webinar, many of you would have Vodafone Idea in your portfolio. But the moment if I told you that this company is a high risk, low return, would you have bought this company? The answer is no, but no one bothered to inform you that this is not in your interest to get into this company. Because हमें tips अच्छी लगती है, किसी ने बोल दिया, हमने buy कर दिया. And look at ITC, low risk, low return. The moment if I tell you that ITC is a low risk, low return, would you go? He said, it's better that I put my money into fixed deposit. Why? At least my capital is safe. Am I right? Your capital is safe. So this is the kind of insight. I've just taken three examples for all of you. This is the kind of insight we give you to help you take very informed decision. And we want the markets mojo has an ambition and has a hope that if the moment the retail investors take informed decision, that the 95% retail investors who lose money in the equity market, and that ratio will undergo tremendous change, and we will see 95% retail investors making money in the equity market. And that's what drastic change we wish to do in this country. There's another feature that we have called switcher. Now, many times we want to know that I hold one particular company, whether I should continue to hold that company or I should get out of that company. So let me give you another take you to the website again. And let me take you to the website, Markets Mojo website again. I'm going to the switcher. Okay. And I'm here, I'm saying Yes Bank, okay, which a lot of you are holding, and say I'm holding 1,000 shares of Yes Bank. This is my switcher feature, and I'm saying run switcher. Okay, I said, it's asking me, do I want to invest in private sector bank, highest rated, or in large cap, or across the market? I said, I'm willing to go for across the market. Let me see what happens. Now, on a fraction of seconds, it's telling me you should get out of Yes Bank and get 18 shares of Minda Industries. And it tells you why. At the same time, it tells you if you don't like Minda Industries, you can buy 11 shares of Hindustan Aeronautics or 37 shares of CSB Bank, that is Catholic Syrian Bank. From bank to bank, you can go, or if you are very comfortable in large cap only, you can go to HAL. So this is the kind of insight the switcher helps you to take a call. And it's a very powerful tool in our system that really helps investors to take a call. So whenever you want to validate a tip or you want to look at, okay, should I get out of this company or not? Just go to switcher section of our Markets Mojo, put the number of shares that you held in this company, and within a fraction of a second, we will tell you what needs to be done with that particular company. The reason why Markets Mojo has a 80% success ratio, because we look at 550 parameters on a single company, 550 parameters. If you ask any research house, they would say they would analyze 10, they would look at 10 parameters, 15 parameters, 20 parameters, at the max 50 parameters. But Markets Mojo looks at 550 parameters to analyze a company. And because of that, we have a success ratio of 80%. We look at 3 crore data points on a daily basis. That is 30 million data points on a daily basis to analyze a single company. And because of this, India's leading broking firms use Markets Mojo as use Markets Mojo research to empower their retail investors like HDFC Securities, Motilal Oswal, Angel, Axis, Aditya Birla Capital, Geojit, so and so forth. Not only that, Bombay Stock Exchange and National Stock Exchange also use Markets Mojo research to empower retail investors. If you go to BSE India website, I've taken widgets from there. You search, I've taken for Yes Bank. If you search for Yes Bank, okay, and you go below the price of that Yes Bank, you will get this kind of a widget. And this widget has been powered by Markets Mojo. And this is what even Bombay Stock Exchange, National Stock Exchange use our research to empower retail investors. Why? Because they believe, they are convinced that our research is very, very powerful and our research is unbiased. And that is helping retail investors to create wealth in the equity market. Today, Markets Mojo controls 30% of the market share in the country. And reason is very simple. Why is that so? Because we take investors' interest at the top of our criteria, and hence we will never ever recommend you buy or sell just because we earn broking or commission income. Why? Because we don't, whenever you buy and sell, we don't earn a single rupee whenever you buy and sell, and hence we will recommend you only when it's in your interest to buy that particular company or it's in your interest to get out of that particular company. Okay, I'll just skip some of the slide just for the this one. Now, many times I have been informed what is the target price and do you give target price? Do you have any fixed holding period? I must tell you, we are unique in this sense. Markets Mojo research does not believe in giving any target price or any holding period. Why? Because in the beginning of the webinar, I told you there is no place for human bias. And because of the no place for human bias, as long as the company's own parameters remain strong, that company will remain buy in our system. The moment that parameter deteriorates, we will ask you to get out of that company. And the moment I give you a fixed holding period or a target price, probability is very, very high that you may get out of that company a little early. But I will showcase you how Markets Mojo has been able to create wealth for the investors, because We don't have any fixed holding period or target price. And because of that, many companies in our system has given 4x, 3x, and 2x kind of a return in last 12 months also. Okay. The proof of the pudding is that does our research creates wealth for the investors or not? And hence we decided, let me showcase this. And we have compared with the best in the country. Okay, so let me explain you this slide little bit in detail. What you see is a light blue graph, is a portfolio created by Markets Mojo using our research in FY21, that is 1st April 2020 till 31st March 2021. That is 1 year. The Markets Mojo model portfolio went up by 107% in FY21. And then I'm comparing with India's leading PMS because I want to compare with the best, am I right? So I'm comparing India's leading PMS, Alchemy, Marcellus, ASK, Motilal Oswal, and so forth. And you can see some of the leading PMS in the country struggle even to beat the Nifty 50, which is up by 71% in FY21. What Alchemy leaders gave return only 30%, 30. Marcellus, managed by one of the leading fund managers in the country, just up by 50%. ASK Select, just up by 50%. ASK India Vision up by 59%. And if you look at MOSL 3 PMS, 59%, 60%, 64%. They completely underperformed the broader market. While our research has helped you to create 107%. And that's the power of our research in terms of wealth creating story. Many of you would have attended my webinar on Equity Outlook 2021. And I did give you 12 companies which we believe will give a lot of returns to the investors. I'm happy to tell you that if you had followed our advice in terms of buy and sell on that portfolio, that 12 company today is up by 54% versus benchmark BSE 200, which is up by only 16%. In other words, while on one hand, mutual fund industry struggled to beat the benchmark, our portfolio created 54% return in first 6.5 months of the current year. Had Markets Mojo been PMS or an AMC, we would have topped the table. And if you look at it, where we have taken so much exposure, IT is the highest sector exposure. Why? It's up by 21. Its exposure is 21%. And today you know that IT sector did extremely well. The reason why we are doing well as compared to some of the other the research houses or other PMS or mutual fund, the reason is very simple, because our research is so powerful that is really helping us to get into the right company at the right time, and at the same time helping us to get out of a company at the right time so that we can replace that company with another good quality company. And that's really helping us to create wealth for the investors. This is a list of Mojo stocks, which is nothing but a top buy in our system. Like Saregama was first recommended by Markets Mojo on 30th October 2020. And since then, this company is up by 420%. Now, they ask a simple question. Did you buy Saregama in October 2020? Did anyone ask you to buy? And do you continue to hold as we speak? If the answer is no, it's a high time to start using Markets Mojo platform. Did someone ask you to buy Mastic on 24th July 2020, which is almost a year back? The split is up by 375%. Laurus Led, Ion Exchange, TN Petro Products. This is the kind of wealth that some of our top buys have created for the investors. You can see the complete list on our website, and we display the complete list without filtering anything. We will also disclose where we have gone wrong, and where we will also display where we have gone right. I'm happy to inform you that our top buys, the more number of companies have created more wealth for the investors, more companies have created more wealth, and very few companies have created even negative returns. And whenever they've given negative returns, return is much, much smaller as compared to the kind of return the company where we have given positive returns. So not only the more number of companies have given positive returns, but whenever they've given positive returns, the returns are far, far in triple digit and so on and so forth. While the company, when they've gone down, only 5 companies have given double digit negative return. That is maximum is 18%, 1/8. And very few companies have gone down in single digit. You can see the complete list on our website. Now I'm giving you a mantra to create wealth in the equity market. Just listen very carefully. And this 2 minutes is going to change the way you invest in the equity market. 2 minutes, just listen very, very carefully. If you really wish to make money in the equity market, take informed decision. You must have a strong reasoning why you are buying. And if you want to get out of the company, you must know why you are getting out of the company. And if you don't know which platform will help you to take that informed decision, Markets Mojo will help you. Why? Because we have view on each and every company when we analyze and we do research on those companies, and we will tell you very clear cut whether it's a buy, hold, or sell in a very unambiguous manner. Now, Jason also made a statement in the beginning of webinar. He will tell you which are the few stocks which we believe which should do well. So I'm giving you 2 stocks from large cap, 2 stocks from mid cap, and 2 stocks from the small cap, which we believe will do extremely well going forward. So one company is Mindtrade. This is the today's price 2695. Today the strip is up by 8%. This company we have been recommending since 17 July 2020, which has gone up by 164%. We continue to believe that Mindtree will give more returns to the investors. If you have happened to read yesterday's company came out with the numbers are extremely good. The numbers are extremely good. And we believe that this company will offer a lot of capital efficiency even going forward. Another company is Laurus Labs, which is in last 1 year, we have been recommending this company as a buy since July 2020. The scrip has already gone up by 316%, and we continue to believe this company will make a lot of money for the investor. That's a large cap. Let me come to the mid cap. Today, Saregama was up by 4%. And if you look at this company in last 8.5 months, it has gone up by 420%. We continue to believe this company will make a lot of money for the investors, and hence it remains a buy. CDSL, last couple of days, a lot of research reports are floating in the market saying that one should buy CDSL. But I must tell you, only 3 months back, almost or maybe 4 months back, Markets Mojo was the first one to recommend CDSL as a buy. And since that, this company is already doubled. But we believe the journey of CDSL is still not yet over. If you have not bought CDSL, please buy CDSL even at 1,300 rupees. Why? Because we believe this company will offer a lot of capital appreciation to the investors. Why? Because number of demat accounts are increasing day by day. CDSL has been increasing its market share in a demat, and that would definitely help in populating down in its top line and the bottom line. Today, again, the scrip was up by 4%, and we believe this company will further give capital appreciation to the investors. So 2 from large cap, 2 from mid cap. And let me come to the small cap. Tata Steel Long Products, many of you, I don't know, had a concerns about whether steel companies will do well, not do well. And many of you would have asked me what to do with Tata Steel Long Products. And time and again, whenever we did webinar, I told you, please continue to hold this. Today, the split was up by 4%, but Markets Mojo recommended Tata Steel 9 months back, Tata Steel Long Products, 9 months back. Since then, it's up by 162%. And when there was a lot of uncertainty, we continued asking you to please buy, please buy, please buy. And those who adhered to our advice and bought it, they must be really feeling very, very happy. And that is the power of Markets Mojo, giving advice in an unambiguous manner, clear cut, buy hold or sell. And Tata Steel Long Products is a clear-cut strong buy. So if you have still not bought Tata Steel Long Products, my advice to all of you, please go and buy, because it's a very strong buy in our system. NGL Fine Chemical, one of the fine players in the pharma sector, from a small cap, which is small cap company, become a mojo stock almost 8 months back. Since then, it's up by 154%. Today's descriptive was up by 5%. And again, I'm requesting all of you, if you're still not bought, please buy this company, because we strongly believe this company will offer a lot of capital appreciation to the investors. You know, Warren Buffett in the last AGM has said very nice thing. He said there is a lot more to picking the stocks than figuring out what is going to be the wonderful industry in the future. And that is what exactly Markets Mojo does. Markets Mojo has a bottom-up approach, and instead of trying to figure it out which industry will do well, Markets basically Mojo select a company based on its own merit, based on its own fundamental strength, and hence our success ratio is much higher than rest of the market, for the very simple reason, because when we recommend a company, we recommend a company based on its own strength than the sector fancy. Now, I'm happy to inform all of you that Markets Mojo is very soon launching 2 more powerful features on its website. Number 1 is an analysis on a mutual fund scheme, which will be releasing very soon. I've just said 10 days, but we'll definitely launch before 10 days. If you happen to attend my webinar a couple of days back, I would have said 30 days. But in next few days, we'll be launching analysis on a mutual fund scheme. In other words, if you're holding any mutual fund scheme, we will tell you whether you should continue to hold that mutual fund scheme or not. And in case if you want to buy a new mutual fund scheme, we will tell you which mutual fund scheme you need to get into. As and when we launch that, the minimum price of that feature would be 5,000 rupees, minimum, I'm saying. And second product that we are going to launch, feature we are going to launch on our website, is products based on technical analysis. Not one product, but many products based on technical analysis. In next 45 days, we'll be launching that product. The minimum price of that would be 10,000 rupees. Of that feature would be minimum 10,000 rupees. In other words, minimum increase in MRP would be 15,000 rupees of Markets Mojo Professional per annum, 15,000 rupees. Okay. Now, as you may be aware that yesterday, Markets Mojo increased its price of Mojo Professional. So previously, it used to be 23,999. We increased it to 25,999 now. Why is that so? Because we added one feature called Portfolio Score. And because of that, we increased the price of Mojo Professional. Once we launch this 2 feature, one is that mutual fund analysis, which we are going to launch very soon. The minimum hike in the price would be 5,000 rupees per annum. The moment we launch technical analysis, products based on technical, another hike of 10,000 rupees. So this will happen in phased manner. So to the 25,999 will minimum will go to 30,999, and then 40,999 minimum that. But we are giving you a last chance to subscribe to Markets Mojo at 14,999 for 27 months. 14,999 for 27 months. So we have increased the price, but since you are attending this webinar, you can avail this offer of 14,999. This offer is ending very soon. If you go to our website, you will see MRP of 25,999 for 1 year, and it will give you an offer to get it at 17,999. Instead of that, since you are attending this webinar, you have got a chance to pay only 14,999. So not only you are paying less amount, 3,000 rupees less as compared to 7,999, but instead of 1 year, you are getting 27 months. That is additional 15 months we are getting. This offer is very limited period. I must tell you why. Because a lot of you people requested that we should extend our 5th anniversary offer, and hence we have extended. Very soon this offer will go away. Price will go up because of our mutual fund analysis coming in. And then further it will go up when we launch our technical products. This price you will never get in future. I must tell you that with a lot of confidence. And hence my request to all of you, please avail this offer immediately. Jason has put a link in the chat box and that will help you to avail this offer. Those who are a subscriber, they also got a golden opportunity to extend the subscription without any delay. I know many investors like you have extended subscription till 2040. Why? Because price of Mojo Properties will keep rising going forward because of new features coming in. But today you got a golden opportunity to lock in that future price hike now by going at 14,999 for 27 months. So Jason has put a link. You can click on that link to avail this offer. So over to you, Jason. We'll open the floor for question and answer.
Yeah, I'll try my best to pick up most of the questions. Mr. Sunil, there's a slight echo from your system. Please check it.
Slight echo from my system. I'm not very sure. Let me put my headphone. Maybe that could.
Yeah, that will help. Yeah.
Yeah, let me just put that. So, okay. So let's see if that basically resolve the problem. Yeah.
Yeah, I try my level best to pick up all questions, but I'm just dropping another link in the chat box where we have a full-fledged Q&A session at 7 p.m. So if by chance I couldn't pick up one of your questions, you could attend that as well. I'll just start off with the first question. There's a lot of questions asked on this particular stock called Keytex Garments. Most of the users have actually not been able to get in the stock. Do you have any viewpoint on this particular share?
Keytex Garment, am I right?
Yeah.
So am I echoing now?
No, it's better. It's better.
Yeah. So Keytex Garment, I think it ran into a some kind of a political problem in the sense they wanted to set up a factory in Kerala, and then they come across some kind of a clearance not coming in, and they decided to move to Telangana. And that's what happened. And once they decided to set up in Telangana, the script moved up substantially. So this company, Keytex Garment, was once upon a time a most fancied company on the market. And then it started underperforming significantly. But in last 10 days or 15 days, because of this decision to move out of the Kerala, did really help this company to start performing well on the market. So we don't know whether this sentiment will get sustained as we speak. I think in our system right now, Keytex Garment is a hold. And my suggestion to you, please continue to hold this company in case if you are about the company. But fresh buy is not recommended at this level. Yeah, it's a hold in our system.
Okay. Going forward to the next question. Every day there could be some changes in the Markets Mojo model portfolio. How do we define returns generated by the model portfolio so far?
Sorry, Justin.
Yeah. Every day there could be some changes in the model portfolio. How do you define returns generated by the model portfolio so far?
Okay. So, yes, it's a very good question. Who has asked this question, Jason?
The name is not given. It's written 1+6. There's no name.
Okay. So, see, yes, you are right. Every day there will be a model portfolio that will get generated. Now, return that we calculate basically is your own portfolio. So, when if you create a model portfolio today, the return that you see is your own portfolio that we see. Now, how do we display the returns? So, what we do, we look at daily portfolio which has been created on our website, and we see what kind of return daily portfolio is generated. So suppose you have come on 13 July and you have created portfolio in 2021, 14 July. We keep computing this portfolio on a daily basis and the buy and sell that takes place to understand whether we are doing well or not. So when you create your own portfolio, the return that we showcase is your own. We don't basically showcase you. What we display on our website is the portfolio that has been created 5 years back. And whenever we recommended buy and sell, and you follow that in a very disciplined manner, what happened to that particular portfolio over a period of 5 years if you had followed this in a disciplined manner. So that's what we display on our website on a 5 years back portfolio, what happened. Not only that, if you want, we can also share the data with you, how consistently that portfolio outperformed the benchmark on each calendar year. So, and that's also gives the comfort level in the sense that this return that we are showcasing on our website is not lopsided. On the contrary, the return that we are showing on our website is a consistent growth. Every year after year, that portfolio is able to create wealth for the investors. I hope that was your question 1 plus 6. If not, please do ask me and I'll be more than happy to clarify further on this.
Okay, so there's a lot of questions asked on this particular article. According to Bucket's Mojo, ITC is categorized as hold. Incidentally, today ITC has filed a 100 crore defamation lawsuit against a portfolio manager, Mr. Gupta, and 2 officials of Financial Block site for his post suggesting that ITC board and management indulged in insider trading and the shareholders have been misled. What's your view on this lawsuit and how do you think markets would react to it?
So to be very frank with you, I have no view on that. So I don't want to go into that controversy. If someone is saying that there is insider trading or not, I am not privy to it. I don't know what basically transpired them to write that there's the insider trading. I have no idea about that. So the way we look at ITC, and in fact, Jason, I think it's our promise to the people that we must do a webinar on ITC.
Yeah.
So I think we should do that. See, the biggest the problem why ITC has been underperforming, because if you look at the return on equity, that continues to remain a little suboptimal. And the reason is very simple. And in fact, I showcased you the research report also while making a presentation on ITC, how this company top line growth has not been growing, how bottom line has been not growing. Today, ITC has become, so even today, despite it is so much diversified into other FMCG business, hotel, paper, so they have other businesses. Still, this company, 80-85% of the revenue comes from the cigarette business. And today, the new norm in the world is that people want to be ESG compliant. Okay, and the cigarette and liquor business does not come into that ESG compliant. So because of that, a lot of institutional investors, a lot of FIIs want to reduce stake in a cigarette company. And ITC is also a classical example of that, number one. Number two, this ITC can start doing well once, that's my personal opinion, it's not market's opinion, if they start demerging the various business like FMCG business, hotel business, paper business, so on and so forth. And once it does that, I think it can unlock the value for the shareholders. If it doesn't do that, I'm afraid ITC may continue to underperform for a significant period of time. And if you look at ITC, again, I'll take you to the website. Let me take you to the returns. You know, this company has underperformed significantly for year two, that's in 2021, despite offering almost 5% kind of a dividend in 2.32%. Even though the oil market went up by 11%, this company is down by 2.2. 1 year, only 4% versus 47%. 2 year negative, 3 years negative, 4 years negative, 5 years negative, and 10 years, it's up by 51% versus oil market up by 184%. So this kind of underperformance reason is very simple, because this company has a very poor return on equity. And till such time it basically improves that ROE, I think this company will, the ROE I'm talking about the FMCG business where it's very, very poor ROE, that will continue to hamper the valuation this company can command.
Okay. This is actually a suggestion given by Mr. Manohar. My portfolio score is excellent. Is it possible to provide a withdraw option like the one in model portfolio, so that if I want to withdraw money, it will give me which other stock should I sell and how much quantity to sell? Yes,
we will. We are working on that option, and very soon we will give you that option also. Not only will give you withdrawal, we can also give you an option for adding investment in the portfolio.
Okay, I know you covered this on your presentation slides, but a lot of investors, including Mr. Jigar, has asked this particular question. Why don't you exactly provide an entry point or zone for buying strong buy or buy rated stocks? Could you elaborate further on this?
No, what is the question? Why don't you provide?
Why don't you provide an entry point on when to buy a strong buy, like a target price or something?
So no. So we do give a clear-cut buy. So we are saying buy even at 1092. Okay, Tata Steel long products. So we are giving you the entry price. Even 1092 is the entry price for you. NGL fine, you can buy it 2955. It's the entry price. Now we don't give holding period, nor we give target price. The reason is very simple, because what we have observed, see, we don't know how strong this company will continue to outperform when the company numbers will undergo change. We don't know. We are driven by bottom-up approach. We are slave to the company's financial data that comes out. No one can say with certainty that the next quarter of the company will be good or not good. Okay. And as I told you, we don't basically get colored by the human bias. No. This company, one quarter is bad, next quarter it will come out well. In our system, if the company's one quarter numbers are not good, and if our overall score because of that goes down, we will advise you to get out of that company without any human emotions coming in. At the same time, so we don't know when that will happen, number one. Number two, if I give you target price, human tendency is this, which we have observed. Suppose if I told you this, let me take you this Saregama. The moment I told you to get in 661, and I said this company will have a target price of 800 rupees, just for the argument's sake. Many investors are very smart. They would not have wait for the 800 to touch. They would have got out at 790 and 8 without waiting for us to revise our target price also. And hence, had they done that, they would have missed out on the rally that happened. The SPIP is up by 420% since our recommended level. So in our system, there is no place for human emotions. There is no place. We are slave to the data points coming in. The data points coming in suggest that you should continue to hold, will advise you to hold. The moment data point deteriorates, we'll ask you to get out of that company without any human emotions. And because of that, we have been able to generate return well for the investors. So hope that makes it very clear.
Okay. Picking another question. This is by Mr. Rakesh from the YouTube chat. How do you forecast growth without any human intervention? Based on what parameters? Do you predict future based on past results always, or do you weigh in any management commentary?
So Rakesh, again, a very good question. I'm happy that you raised this question. So Rakesh, what we do is that we don't take into consideration any management predictions given by the management. We do not take into consideration any Bloomberg also analyst consensus. Okay, whether this company will report so and so growth and so forth. Our analysis is purely based on the historical data, how this company has performed, and our big data analysis based on that historical performance will try to understand how this company can create wealth for the investors going forward. So when we recommended Saregama, Mastek, Lotus Lab, Ion Exchange, Tea and Petro Products, Newgen's software, we did not take into consideration any future projections given by the management of the Bloomberg consensus. We analyze the data and past data, and the way we have fine-tuned our big data analysis, that really helps us to understand how this company can going forward, can create wealth for the investors. So that's what we have done, Rakesh, to help us. We have another parameter in our system called technicals, and based on that technical parameters also help us to understand whether this company can offer a capital appreciation going forward or not. So we use 4 parameters, Rakesh, just to help you understand: quality, valuation, recent quarterly financial performance of the company, and the technical. And based on that 4 parameters, we derive a score of the company. And based on that score, we will tell you whether you should buy this company or you should not get into this company. And this is the track record that we have. I'm happy to inform you that we have a success ratio of 80%. Based on this big data analysis, has been able to beat the benchmark not only once, but time and again.
Okay, this question by Mr. Harish. Hi, I am a senior citizen. Can I purchase your webinar subscription for my son and pass it to him? Do I need to pass his email ID to support?
Of course, you can do that, Harish, without fail. You can do that. You can gift it to your son. Please inform us. Please do share the email ID. You first make the payment and then say, please attribute this subscription to so-and-so person, and we should be able to do that. Maybe Jason, you can help him with the link so that he can use that link to subscribe to that Mojo Professional of 14,999 for 27.
Okay, there's another question by Mr. Vinod Rajkumar from the YouTube chat. One particular issue with top stock picks for Mojo is that it enters at night, but on the next trading day, there is a gap up open for that stock.
Okay, so yeah, what we are saying may be right. Okay, we know that may not be happening with all the companies, but I do understand it must be happening with some of the companies. But assume that it's up. Okay, it's up by 2%, 3%, 4%, 5%. Now the question comes, are we recommending that company for 5% capital appreciation? The answer is no. The answer is no. In other words, even if this clip is above the recommended price, you should still go ahead and buy that company, because we believe that company will give a lot of capital appreciation going forward. So that should not deter you. If the script is up, that should not deter you from buying that particular company. Please go ahead and buy that.
Okay. This question is by Mr. Matthew. On the BSE script page, you have given your comment for the respective stocks. Is this data reliable and updated?
Of course, it's reliable and updated, no doubt about it. So whenever any new result coming in, we would update the data, and that's the same get updated. Now, what is available on a BSE site is only the CFT score, and that's it. But if you really want to know whether you should buy that company or not, then you need to come to the markets module, because BSE by nature will not be able to recommend any buy and sell, because they are not supposed to do that. Okay, they cannot, being an exchange, they can't advise investors to buy particular company and sell particular company. So they will only display data provided by markets module on the how good or bad the result is. That's it. If you really want to know whether you should buy that particular company or not, then you need to come to the markets module to understand whether that company is a buy or not.
Okay, this is a particular stock specific question by Mr. Vinod. Can I replace my stock Lupin with the stock you provided of Tata Steel long products?
Okay, so what's the person's name who asked this question, Jason?
Mr. Vinod.
Vinod. So Vinod has asked another previous question also. Okay. So Vinod, what has happened that we have a switcher. Now, not necessarily that you use a switcher as a platform, because that will really help you to understand which company you need to get into. So I'm just going for you, Vinod, if you don't mind. I'll just take you there. And it will ask you, or Lupin is a company. I assume that you hold 100 shares. I'm just making an assumption, right? No? Then it will ask you a question. Do you want to in the pharma sector or in the large cap, because Lupin is a large cap, or higher it stock peers group, or you want to basically higher it stock across the market cap? I'm saying across the market cap, okay, because you wanted to get into a scale company. He says instead of either you can continue to hold Lupin, and if no, then you can buy 166 shares of Minda Industries, or I'll give you two more options. Either you can buy 39 shares of NGL Fine Cap, or 431 shares of Vedanta.
Okay. This particular question by Mr. Kiran Rao. Mr. Mohit did speak about Infinum yesterday and provided a small view on the same. Could you explain how do you recommend stocks on that particular platform? Also, is there a special price I've already extended on Mojo, but Infinum pricing looks much costly?
Oh, okay, no, okay. So I think what Mohit explained is that we have launched the same way we have markets Mojo for the Indian market, the same way we have launched for 21 countries, the Infin Hub. Okay, where the same way what you see for Indian market, we have for USA, UK, and the France, Sri Lanka, Switzerland. Can you see my slide?
Yeah.
Yeah. Italy, Jordan, Mexico, and Netherlands. So what you see markets Mojo for India, the same, something similar is available for India, world's leading market, because ultimately time has come for the Indian investors to start exploring outside India. You need to de-risk your equity portfolio. And there are certain things which are available only in other markets, not in India, like e-vehicles, okay, artificial intelligence, lithium-ion battery kind of stuff, which are the very high-tech businesses which are available only in the other markets which are not available in India. And if you really want to take an exposure, then how do you take that exposure? And based on that, Markets just launched InfinHub, covering 21 countries. Of course, we'll be covering more countries going forward. And you did mention about the prices. So yes, we have a very special price, as Mohit was explaining yesterday, that the price of Mojo Professional is $999 per annum on the InfinHub for 21 countries, okay? But if you are a Mojo Professional subscriber, you can go only for $399. In other words, you get a massive discount being a Mojo Professional subscriber, 60%. Of course, again, this price is not going to remain forever. It's a very limited period offer. So in case if you wish to diversify outside India, if you're a Mojo Professional subscriber, you got a golden opportunity to, instead of paying $999 per annum for 21 countries, you can go for only $399 per annum. I hope that's clear, Jason. If you want, I think Jason, you can provide a link. I think that person, since he wants to buy, maybe he can put a link so he can avail this offer.
Sure. So few of the investors actually asking that how can we buy these shares which are on global once we subscribe to these services? Will you be providing any brokerage service?
So right now we will not be able to provide any brokerage service. Maybe you need to go to some of the leading brokers who also now offer you facility to buy and sell shares on the international market. RBI allows you to buy up to $4 lakh US per person. So that's a limit. In a family member, if you have 4, then you multiply by 4. But some of the brokers do help you to buy and sell on the foreign markets. You need to get in touch with those brokers, and they will help you to execute the trade.
Okay. Picking this particular question by Mr. Stanley. What is the real difference in buying a strong buy Mojo stock and a strong buy non-Mojo stock?
So, Stanley, it's a very good question again. So, within buy, so we have a score, okay? So anything above 70 and above, and anything above 80, so anything between 70 to 80 is a buy. Anything above 80 score is a strong buy in our system. What is the difference? Difference is very simple. That buy is also a buy and strong buy is also buy. But the probability of strong buy doing better than the buy is higher. And that's why it's a strong buy. So it's just a level of difference between the two stocks. So ideally, when you buy Stanley any stock, you should first preference you should give it to the strong buy in our system, provided you don't take too much exposure to that particular sector, or you don't take too much exposure to one particular market cap. But the higher the score, the better it is. That's what our system suggests you. That's point number one. Now, the second leg of your question was that what's the difference between the buy and not a Mojo stock? So there are two basic difference. One is that there are many stocks, maybe a buy in our system, but the quality of that company Stanley may not be good, and hence we will not recommend that company as a Mojo stock. Why? Because whenever we recommend a Mojo stock, the quality of that company has to be minimum good. Okay, if the company has an average quality or a below average quality, that company can never become a Mojo stock. And the philosophy is very simple. Whenever we recommend as a Mojo stock, and then which in turn goes into the model portfolio, that company has to have a minimum good quality. We don't believe in momentum stocks, and hence we will never want to compromise in selection of a stock. The company will be doing extremely well, but if the quality parameter does not satisfy, we will never ever recommend that company to you as a buy. So that's reason one. While there could be a stock which could be a buy in our system, but not a Mojo stock. And second reason is that that company may also have a good quality, may also be a buy, but still not a Mojo stock. The reason is very simple, because that stock is not yet approved by the investment committee. Our investment committee will go through the company in two parameters. In fact, I just quickly glanced to that. So our investment committee will go through in two parameters. what is the corporate governance issue? If the companies have smell on the corporate governance side, then the company will not get approved by the investment committee, or there is a problem with the business case. And if there is a problem with the business case, then still Markets Mojo will not approve, our investment committee will not approve that stock as a Mojo stock.
Okay, I think Sunil, we've crossed our time limit for now.
Okay, so I know many of you would have still more questions to have. Not to worry, I have one more webinar at 7:30. Sorry, I stand corrected. Which is an open, free flow question answer session. So if your question has not been picked up, please come and visit and attend that webinar. Just a gentle reminder that we are launching two powerful features. One is an analysis on mutual fund scheme, and second thing on the products on technical analysis. Both this product, as and when we launch, the minimum increase in the MRP would be 15,000 of a Mojo Professional. Today, you got an opportunity to avail at the very substantial discount at 14,999 for 27 months. We have already increased the price by 2,000 rupees. Why we launch portfolio score. So price which was 23,999 has gone to 25,999. My suggestion to everyone, please go and avail this special offer, which is very limited period offer of 14,999 for 27 months. Jason has put a link in the chat box that will help you to avail this special offer. So thanks a lot, everyone, for taking time out and attending this webinar. I'm also having a Q&A with me at 7. Please do join in there, and we will take up any question that you may have there. Over to you, Jason.
Yeah, thank you to each and everyone. As Mr. Sunil rightly mentioned, the webinar will be shortly going live in 40 minutes for the 7 p.m. I've dropped a link in the chat box for the same. Looking forward to seeing each and every one of you over there in large numbers. Yeah, goodbye and have a nice